Good afternoon. Thank you for joining the Bullish Bears YouTube channel. And I got to say, we got a great opportunity to show how to trade a head and shoulders pattern like a pro. This is actually pretty informative. I'm going to show you a couple little tricks to add to your average head and shoulders pattern, whether it's a head and shoulders or an inverse head and shoulders. It is a reversal, but only when it's confirmed to be a reversal. And I'm going to show you how to find all of the opportunities to trade it on the output side of it after the fact. Once you've recognized the pattern, I'm going to show you how to plot everything you need to know to figure out where your price targets should be. Let's begin. So this morning on the 1-minute chart for SPY here, we had an opening range low. And you can kind of count this as a head and shoulders top here. You can see the telltale signs. You got a big high, little shoulder, shoulder, even though this one had two heads. Same kind of concept. The output side of this to find this target is actually kind of unique, and you can actually just use a simple drawing tool to find it. In fact, you can find it with one line. And the objective is to avoid trying to chase this output or this outcome of this bearish trade even lower. Most people are going to look to the left. They're going to see where the previous low was, and they're going to target that. They were wrong. And a lot of them got trapped and ended up giving up a bunch of profit in this little move right here. And this is on SPY. Imagine chasing this with futures. You would be pretty livid if you got a great entry and then you couldn't get out of the way in time for this to snap back on you. But I'm going to show you how to find exactly that target. Let's start by drawing. And then when I hit my drawing tool, you're going to see a little bit over here of what I drew to find a target on the outcome of this head and shoulders top. Let's get the lines on here. So it's simply this. Find the first reaction low after the move. And if you look at this, this is a 1-for-1 measured move, and it made a perfect mean revision right down to this low. That is where we're going to start drawing our line. And then the next low, all we got to do is find out where the trend line is, where the common trend line is. One line can have that target right there. Pretty simple, right? That way you avoid trying to chase it to the opening low. You know exactly where to take profit on that trade, and you get out a candle or two before everyone else is panicking and trying to close a position to cover. So how do we get these targets? Well, this is the beauty of the diamond pattern, and I've talked about these many, many times before. But when you apply the diamond pattern to a head and shoulders top, you get a methodical price target, and it's really a lot easier than you'd think. So this is the angular support line in question, very similar to this one here. And this one was touched with a wick. Well, we verified this pattern on a 5-second chart and then traded it on the 1-minute chart. We knew exactly where to take this and exit here. That was a quick break, very easy 1-for-1 bearish trade. After the fact, we got this head and shoulders where it came back, made mean revision after mean revision, and kind of settled in a range. And eventually all ranges break, as we know. So how do you find the exact trades to take after the head and shoulders pattern? Well, that's the beauty of drawing this. Look at that. We went right to the angular support with a wick. Easy trade. That is knowing you're getting close, take your profit. But how do you trade the break on this? Well, you find an angular support coming out the other side. As always, whenever you draw a diamond, you're literally drawing two possible channels. You got a bear channel and a bull channel. And in the center of those channels, you'll find regression lines. That's what these white lines are for. So once you define the range of the move or the price action within the move, you can pick off very easy entries and exits. Would you enter here? Probably not, because there's a good chance it could find support here and kind of move out and come to a fine point of range into this pattern. This is probably the entry candle right here. Right when you break that known common support area, that is where you go short. And you could take your profit right upon the contact of this regression line, and then you could take another entry off of this little rest candle here, or this little pause candle as we come to call it, and then get back into shorting it after this breaks that regression line. So you could resume your position later and take it short, leaning towards the angular support line. The moment you see a flash of green coming back up, as soon as it eats even a little bit of this candle, take your profit. Pretty simple. And then it gave you another opportunity. We had essentially a double bottom in this mix. So then we got a low, a high, a low, and then we got a break above the first high. And then once we achieved breaking that resistance level, we saw this big green bar here. This was a pretty easy entry right across that regression line to take the second half of the move. This is part of a measured move. This is the first leg. The expected move goes to angular resistance. You start seeing it getting a little bit choppy or a little wicky at this point, take your profit. Pretty simple trade. That's a good, nice little 3-point move right there. So consolidation goes back in, sets up another range right within the angular resistance of the bear channel, and then suddenly you've got price action coming back with another measured move. You have a leg here, consolidation, a break above the mean, and you can take a trade above this resistance and run it on to about the same as the size of move you had in the previous setup. So you could trade a measured move that's based within a channel on the outside of a channel on the break. Another thing we like to point out about the diamond pattern is when price starts to follow into an area where you're looking at divergence between your angular resistance and support coming out, you can look at this 200 period as if it's a moving pivot. On a 1-minute chart, a lot of times you'll find that it finds about the center of that diamond and goes sideways in spite of this price action. So the break back across this usually implies that price will tend to continue running all the way up to the previous support line as a resistance line. And it darn near did. Right into the close, we had a nice bull sweep. And we had plenty of opportunities to take several trades in this mess. But knowing where to trade that head and shoulders is very important. Even if you only took this trade, you did very well. And spotting these becomes very easy over time, but it takes a keen eye to get used to finding these patterns and seeing them as they emerge and identifying them before they're completed. And that's what the diamond pattern's for. You start to draw these parallelograms and you can figure out exactly where your price targets are going to be. All right. Well, hopefully this gives you a little bit more detail and a little bit more of an opportunity to take advantage of this pattern here. And just again, I wanted to point out, this was the previous low before the pattern that everybody is aiming for. And a lot of them got stopped out here. There was a bunch of buyers here above the previous supply zone, and they got taken out. But if they would have known about this angular support right here, they would have knew better than to stay short here. They wouldn't have given this back. All right. Happy trading, everybody. Have a great one, and thanks for joining me.